Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is Friday, September 4th, 2020, 9:09 a.m. Eastern Time on non-farm payroll. We do have a 3-day weekend ahead for the market, so all is on the table, but we'll just get right into it. So as we look back at really, what's happened. So if we look at the ramp up that we've had from August 21st till now, that was the last time that we broke out of consolidation. If you look, that consolidation that we broke out of really is at 33.94.95, let's just call it, is where excuse me, where we broke out from. And you can see, coming back, there's some previous tops going all the way back down to basically 33.80. So 33.80 to 33.94 is where we come from. So any pullback short of getting back, just there is a minor pullback, because if you look, we've had, 1, 2, 3, 4, 5, 6, 7, 8, 9 days straight up, and then we had a 1 day little pullback that took some of those days back. Don't get too overexcited to the downside until this happens. We also have some damage that was done, or not damage, but lack of participation in the auction as we drop down. That's what these blue rectangle boxes represent, are areas that can act as supportive resistance that really the auction didn't go so well when we were in them. We didn't spend very much time in these areas. And if you look, I'm going to zoom in now to the chart. And before I zoom in, let's do one other thing that I like to do every day. I like to look at the level 4s, right? Because yesterday had such a large range. These levels are based off of, the previous day's trading range. So level 4 today is down at 31.83 half, and on the top side, 37.39.50. I can tell you that there's absolutely no chance that either of those trade today. So just throwing that out there. What we're likely to get is letting you know that anything is on the table within a range. But if you look at inside of what we have, so the bottom of this first box is at 94.93. So that's likely to be resistance. As we come down here, that's really where we consolidated, all afternoon yesterday after we melted down. And then we spent very little time between here and here. So I would say, the top of this top blue box is the other area that we need to worry about in the future the most. And that's going to be at 35.51 basically. And then if we look above there, we had the similar action from basically on a ramp up move on Wednesday. So that box goes, we'll just edit it so you can see it. That box goes from 35.69 to 35.74 half. So those are your areas of what we just call them auction damage, right? They need retraded. We need to see what the auction looks like, and they will trade again sometime in the future, and we'll just have to see when. It doesn't mean that's going to happen today. Doesn't mean it's going to happen next week, but in the future we will pay attention to these areas. I'll leave them marked until they trade again. So looking a little bit closer at today's action, we have value area high shockingly goes to right at the bottom of this upper box, right around this 35.30. The bottom of that box is 35.31. And then if you look at really what's happened in the overnight session, where this gray dotted vertical line starts up, we've just kind of consolidated sideways. We've went, tested up and down, but basically we're just between the pivot point and the top of what I call the value area low zone. So value area low to me runs from 34.25 to 34.46.75, and you can see that's where we're stopping so far this morning, that we're unable to breach that. The point of control from yesterday is 34.55. That's where the most amount of contracts went off, and the European close yesterday at 11:30 a.m. Eastern Time, or 2 hours after the bell, was 34.72. So as we look at that, we're just basically right where the euros left the market yesterday. So not a whole lot going on from yesterday at 11:30 a.m. Eastern Time till now. We just really consolidated sideways in a range. So on a big drop like this, the basic rule of thumb is that you have a high percentage chance of just staying between the pivot point and value area low. So that would be if that plays out between 34.83 quarter and 34.25 is where we're going to spend most of this distribution. Now we did have major news for the month, right? Non-farm payroll. Non-farm payroll came in pretty much as expected. It was a little bit better of a read, but marginally so. And labor force participation waned, it dropped out, and that's why the unemployment percentages went down as much as they did because people left the workforce. So as we are looking really at what's going to happen, I'm not expecting too much until we break this overnight high. And then remember, we've got that test at basically 93 up to 35.03 is really what we'll be looking at for that. But we can, easily, churn up through all of this action from the bottom of the lowest blue box to the top of the top blue box. If things really get going to the upside, it's going to be hard to believe that that happens, but we will see after the bell what the participation is. So we beat up on the ES a little bit. Let's look at the rest of the indexes. They all have these, areas where the auction didn't go so well, and they're marked with their blue boxes as well. And we can see that the Russell is the relative outperformer, right? It's in the value area high zone. It's already repairing or attempting to repair this structure. The repair only counts during the bells. We watch it in the overnight session, but we're right at the bottom of that lower box. And if you load these grids, you'll have these boxes on your Thinkorswim or your toss today. So looking at just the longer term profiles, what I would have really wanted the Russell was to pull back down into 1490. Earlier in the week, I threw a lineup here at 1534.30 and said we probably don't have much of a chance of trading below that level if we're going to remain bullish. And voila, that's right where we bottomed at yesterday. And we've responded back up. So the Russell right now is the strongest market coming out of the lows from yesterday. Don't discount it. 1582.30 is the point that it's been trying to stay over for a while, and it's been able to. So I would assume that we're going to go back up there today. I don't know if we're going to get over that level, but I would expect a test of that from the Russell since it is actually the dominant market. Let's move on to the NASDAQ because it got beat up, but it had the most to fall, right? It's up the most. And as we look at really what's going on with it, we have, the same thing, just, that massive ramp up. And remember, the NASDAQ got to where it was up 40% year to date. So a little bit of a pullback is really nothing for it. So we've got some areas on here. I think, to be honest with you, I'm not going to be impressed back to the upside until the NASDAQ clears 11,927. That's the consolidation from basically the 27th and the 28th. So last Thursday and Friday, that's where we were just meandering down in a tight zone. We ramped up there. We can watch these other levels when they trade. And now we're, all the way back to Wednesday of last week. So we've really fell far. We went back almost 10 days in time. So as we look at, where this is, it can, and it most likely will take a breather. And again, you can look just like the Russell's going to test its node. If we get higher, I think that's around the top of the day, probably for the NASDAQ is 11,928. And then to the downside, if we do get weakness, watch for that support still at 11,523. And that would be a little bit of a shakeout going under yesterday's low and then respond back up. I don't really think that we're going to breach that level by a whole lot today. At the most, you could go back to these highs from August 19th, and that's going to come in right around 11,434, right around in there. And I don't even think that's on the table today. So looking at the Dow now, so the Dow got up into that all-time high area. It broke it by a smidgen and then rejected. We had the same pattern, by the way, earlier in the year when everything went red for COVID, right? We had the NASDAQ, come down below the zero line temporarily. When it come back up to it, the markets dropped. Then the ES went up to the flat line, and when it got up there, the market dropped and it went over. Now the Dow has got up to the flat line for the year, got over it, come back, and went back under it. So basically, this pattern has repeated every single time. And then we had the Russell, right, that still hasn't got to the flat line for the year. So I expect the Russell to turn positive yet this year as well. And then when it does, we can look for it to turn positive and the markets to have a little bit of a pullback as well, because the other three have done it as they've traded. So looking here at this tighter area, I'm going to zoom into more recent action. Basically, what I was looking at is 28,385, and then I have right at the overnight high here, 28,595, 28,678, and 28,762. I don't think we're really getting over 762 today, but if we do, there should be some serious resistance up at 28,847. So looking back at all the indexes, kind of putting a wrap on my thought, we have a lot of structural damage. The print was basically in line. We'll see what the internals look like once the bell rings this morning and see how we're going. We could check on, the way I like to look at the market. Right now, for the overnight action, we're at the top of the developing value area and above for everything except for the Russell and the Dow, and that's only 21 points off for it, and only 2 points off of the developing value area high for the Russell. So very dominant right there at the very upper end of the range right now. So the market is remaining bid, coming out of non-farm payroll. Don't discount that, and we'll see if we can start repairing these boxes, right? So after we cross above them, you should be able to use the bottom of these boxes as support areas and just try to keep stair-stepping up if we are bullish. If we are bearish when we get to the bottom of these first boxes, and you can see the Russell's already beyond that because it's at the bottom of the third box up, we will start rejecting from the tops of these boxes. So we'll go into the box and we'll reject from the top of it if we're slightly bearish today. I hope this helps. You guys have a great weekend. I'll be in the Discord room today answering any and all profile questions as far as the way I view profile. And then Jack will be back on the mic Tuesday. Remember, 3-day weekend. So I hope everyone has a great holiday and stay safe out there. And I will talk to you on Tuesday, unless you are in the Discord room.